Now there's a special area in structure within swings that we can find that's called an SNDR. And this is a very special little spot, as this is essentially where the market makes major decisions, either to break structure or to continue on with areas, or perhaps violent movement comes out of it. And we'll get into the charts in a second, but essentially what we're looking at is, in our diagram, you have this trend that's continuing up. This area here in our lower time frame was essentially the market doing this, and then it broke. Now there had to have been an area in here where buying was sufficiently strong enough to break this bearish trend, and then we continued up, and you'll likely see something like this as this leg continues onwards. This area typically will have, like in this area here, you'll find price will return to it. It'll tap into it on your lower time frame and continue onwards, right? And then you'll see the exact same thing happen when we break structure on our intermediate time frames. Price returns down to it and continues onwards. If this area is at the top of the range and it ends up getting liquidated, what you'll often find is that price is expected to return back to the origin of this move. In this area here, in this instance, where this large move originated from. And then we're looking for a deeper mitigation into this prior zone. Now, the interesting thing about SNDRs is that when our trend gets a little long in the tooth and we've got multiple swings going on, you'll often see this area of consolidation, which is responsible for breaking structure, and then it's meant to be liquidated. We then liquidate this SNDR into this area. We then tap back in, and this is the beginning of a higher time frame move that's heading down to mitigate the 50% area of our higher time frame swing. And in this way, we allow price to essentially give areas where institutional order flow can take place, where they can then exchange their positions and whatnot in consolidation without it affecting price too much, and then begin its higher time frame move so that we can healthily continue on with our trend, either bullish or bearish. Okay, so let's hop into some charts and see what exactly we're talking about on some multiple different time frames, and we'll look into the power of these SNDR zones. So if we take a look at this chart here, the first thing that'll likely pop out at you was this violent movement down, right? Breaking structure not only here and here, but taking all of this liquidity as we mitigated our higher time frame area of interest. You'll see this often happen as the higher time frame low is left, and we clear out all intermediate structure on the way down. Now, the area is quite significant, and we call it an SNDR because the market made a decision after breaking here. You'll see lower time frame swings happen. The market's expectation was trading back into here and then continuing higher in this short-term trend. And instead, the market made a significant decision to unload, and unload that it did. So this area right here is actually quite important as we draw it out. And you'll notice as we return to it, everybody was eager to short from here because of the momentum that was generated from that little consolidation area in the first place. Okay, so that SNDR was actually responsible for tapping in here, the first tap, failure, violent movement down. That's actually a 250 point move, just that alone. We then had a lethargic movement up, which then failed again, leading us to lower prices until finally we built an SNDR here that ended up breaking above. And then you'll notice after that happens, after price has tipped its hand, it wants to go above this area of interest. We return back down to where? The area that broke it itself. Strong movement out of it, right? So we can use these areas that are responsible for significant price movement, trading back into them, expecting to find strength because the market is telling us that they're an area responsible for price movement in one given direction. Now, the interesting thing about SNDR is that you see them on your higher time frames, and you see these areas responsible for significant higher time frame price movement. But what about the lower time frame? Right? We've got little areas of interest where price has significant decisions that are made, right? For example, this downtrend the expectation was eventually we go underneath this low, right? Until what? Until the price decides here to break above this high. And then where do we return back down to? This area. Breaking above again, trading back down to it, and so on and so forth. This area here, we had a low, a high. This low put in a new internal high. Where do we trade back down to? The area that's responsible for making the decision to not go lower. Trade back down to it, significant price movement. And then so on and so forth. This high here, what ended up happening? We have this high. Oops. We break above it. Whereabouts did price make a decision to not continue this downtrend? This area of consolidation right here. Where are we returning back down to? Right there. You'll find that these areas, especially when they align with the midpoints of those swings that we talked about in the prior module, they form significant price movement areas of interest. And you'll find you'll get good scalps out of it. And then quite often, if there's failure that occurs, you'll end up finding that internal failure gives you a double bottom that then generates a significant higher time frame movement.